Welcome to the Crazy Wisdom podcast. I've got Juan Samitier here, and he is the co-founder of Damn Capital. Welcome to the show.
Hey Stewart, how you doing? Thank you very much for the invite, and everything great on my side. How you doing?
Good, good. I am excited to talk about insurance, decentralized insurance. Let me set this up. I think I got to you being on Crazy Wisdom based on me tweeting to my whole network about looking to investigate decentralized insurance. And this is a very intimate issue for me because I come from California and I had to go through just a nightmare process with my insurance. And insurance is leaving the state of California because the government has basically mandated that they set a certain low price for their insurance, which means that it's not a good business model. So they all left. And then they set up an insurance fund with the state of the taxpayer monies, which my money is going into, and then to subsidize my insurance, which is ridiculous. But then the Palisades fire happened. I think the number associated with that fire in Los Angeles, in the most expensive part of Los Angeles, is about $20 billion. The Cal Fire has about $1 billion in terms of its budget. So 20 times what's in the budget for California.
Yeah,
So which means that California taxpayers, so I'm going to pay for my own insurance later on. But okay, so that rant is over. So I want to understand, what's going to go on. Like, how is insurance going to morph into this, into the
yeah,
DeFi, into the decentralized? What's going on there?
nice, nice. No, that's nice to hear. I find to hear. Let me give just some context
Yeah.
about like these different pieces, and just to clarify. Like I work in asset management since like 3 years, and like, in DeFi like since in high school, and I always look like how to hedge smart contract risk, because like to running due diligence and everything. So last year, while I was managing Kleros treasury, a company like of decentralized justice, I think you have fed in the podcast, and I create this design and this product called Safu, that is the insurance protocol that I created. I went to Asia to work like on that product and launch like a first version. And this year, like I needed to decide what to do, either to continue in decentralized insurance or to continue in Dam Capital, that is the asset management company I funded. So there are two different things. Today, an Argentine team is leading Safu, which I built, and they are taking the lead. But I created and I designed it, so I pretty know much about it. And I'm on asset management. So, but jumping into decentralized insurance, like the idea of Seifu was basically, yeah, to create a primitive which changed the game of insurance, and you take DeFi money Legos to disrupt the insurance industry in many ways that you cannot do without DeFi, and we can jump more into detail why this is happening.
Yep. So, and I would love to talk about asset management in general and smart contract risk. Well, no, so part of Safu was the hedging smart contract risk. So what about, from my understanding of reading the thread before this conversation, is that basically the lowest hanging fruit for insurance, because to solve my problem with California insurance, that's like
Yeah,
probably like 5 years away, 10 years away or something like that.
exactly.
Whereas solving the insurance of assets on chain is like, that's closer. Is that
That's
accurate?
close. Yeah,
Yeah.
that's
What's going on
accurate.
there?
I mean, 100%, because when you're deploying positions into DeFi, basically you're in the wild forest like 7 years ago, a little bit less now, but we still, I mean, you can see hacks all the time. There has been like more than $10 billion lost in hacks, and
Yeah. Okay. Yeah.
what you want to cover actually when you deploy DeFi positions, even if you like have USDC or USDT, is where are those assets deployed, like which protocols and which smart contracts. So when you're an asset manager and you want to play with, let's say, risk-adjusted returns, like you measure the actual yield of your investment and the risk, you want to be able to estimate a final risk of the strategy, and that relies on how big is the code, how new is the code, how battle tested is the code. So if you see a good strategy but you're not certain, you likely want to hedge, and if the cost of your hedge is way inferior than the yield, that makes way more sense. And in my opinion, in the long run, is what will enable a lot of institutional capital to flow into crypto also, because having the certainty of being covered by the bigger risk of crypto, that is smart contract or hacks, will open the doors to many new stuff.
Interesting. Okay. So the primary risk is hacks. The primary intention is to hedge the risk of those hacks.
Exactly.
And I'm less, I only got into finance based on Bitcoin and crypto and understanding those things, wanting to understand the background. I have more understanding of technology and what technology is and all the moving pieces. And your understanding of financial technicalities is probably higher than mine. So I'm trying to understand, like, what is hedging? What is why is it important for treasury management? And what is the relationship to that to insurance?
So in treasury management, generally your goal is to, okay, you can have different goals, but your goal is to optimize and keep the value of your money. Like for example, Kleros is like sitting at $25
Yeah,
million
interesting. Yeah.
and get some yield. Or like because for example, Ethereum, a blockchain, has native yield. Bitcoin doesn't. So and how do you estimate the risk of that yield? Because if you compound that yield year over year, maybe it's the difference between paying like the salaries of the full company over a year or not.
Yeah, interesting.
So when you enter that game, you will check that there are many opportunities in DeFi. That is the thing with most product market fit in crypto, I would say, to put your money. But there are many different options, and there are many different scam options, and etc. And even with the most legit projects, maybe they spend $1 million in audits, like basically
Oh,
engineers that audit the code of these
yeah.
decentralized finance protocols to say, hey, if here it says if I send you USDC to this smart contract, it stays there and it's safe. Okay, I need to audit that it works as intended. But even if you deploy like $1 million, hackers are able to see code and hack it and stay with your money. And there's no way in
Oh.
how crypto works to like be safe
Fully
against that.
audit to fully audit. Why can't we fully audit?
No, we can't fully audit,
Okay.
but even if we fully audit it, like no one gives you guarantees that
Yeah. Okay. Yeah. You got it. Got it. Got it. Got it.
no one can break the code.
Oh, that's where insurance
Uh,
comes in, right?
exactly.
Yeah. So because I've been doing some studies on the history of insurance, and like the history of insurance is that they were insuring large ships going from Amsterdam to in Indonesia, and they wanted to get the spices, and if the spices came back, then they would make a lot of money. But of course, it's not that simple because it's like a 5-year journey out there, and there's pirates, and there's other people, and there's natives, and there's all this crazy shit going on, and so they had to insure that, and so obviously with the risk that some of them would go belly up, but for some reason the business model of spreading the risk among a bunch of different ships is a good business model for insurance. It's not a good business model for fires in California and hurricanes in Florida.
Yeah,
So yeah, what did I get that right? And then
yeah.
how does that apply to crypto?
And yeah, exactly. So from the perspective of user of the and from the user perspective of like the guy who buys insurance, basically you see a good opportunity. Like in the past, going to Africa to buy spices, you see, oh, maybe I made like a 300% annual return on my cost if
Mm.
I get this ship back. But then you have many unexpected scenarios that could ruin your full business, like pirates or whatever. So basically, you say if the cost of me like being covered on those black swan events is less than X, it makes sense for me because I can ensure that in all scenarios I make money. And it's the same in DeFi. If I am getting certain yield or certain financial return on my strategy, and I like it a lot, and I can make that yield for 1 year, 2 years. But if there's a hack, I can lose 100% of my investment in one. So I would say, okay, I prefer to win a little bit less field and make sure that I have the whole amount of my money in all scenarios. That's the point of view who buy insurance. From the insurance seller, like how it acts in traditional finance, basically you are securing with some same capital a lot of different insurance events, and you have like actuarials, like I don't know the name in English exactly, but a lot of mathematics, like doing the math of, hey, what's the probability, the statistic probability of this happening, and you split the risk among those, and basically you make a computation in which you estimate that, like from the premium you collect from selling insurance, you will win more money than all the default events that you need to cover.
Wow.
Except in San Francisco that maybe there was an event that was not expected to be as big, so probably the insurance company lost a lot of money, and that's part of a business model that it could happen. And
That's the
I'm
black
not
swan. That's
exactly,
why a
yeah,
black swan exists, right? Is because a black swan exists and removes the understanding of all the statistics, because the statistics only measure what is possible, right? Or what is
exactly,
probable.
exactly.
Yeah. Hmm.
And I guess there is like actually, and when you run models and you run like maximum drawdowns of your strategy or even like statistics, you take into account this. Generally, especially in crypto, but in everything, like if you take into account every black swan and everything or the worst scenario, the math will never make sense to the insurance, and that's why crypto is so early in insurance. But I
Oh,
guess it applies also to traditional finance. And so, yeah, like
oh, and
the
that
black swans should be taken into account. Probably they're not all the way, all the time taken into account.
it reminds me of an interview I did with Stephen Wolfram, who is a scientist and created Wolfram Alpha and all these other things. A brilliant uh, person. And he talks about how, in order to in order to know the future, one would need a computer the size of the universe, and to understand all the stuff inside the universe. I've written this great book about Ascent of Money, or I've been listening to this book as I walk through Buenos Aires, called Ascent of Money, and it's now the second time I'm listening to it because it's so dense on all these financial metrics and bonds and equities and real estate and all these different things. And I'm part of the reason I'm learning it is to understand crypto more, because my understanding is crypto is recreating all of these things that we already had for the past 500 years, and they're doing it in a
Exactly.
decentralized way. And actually, I had a great conversation yesterday with somebody I'm going to interview, another Argentine in the crypto world, and we were talking about how TradFi is now basically invading crypto in the same way they invaded in the same way a company like Anheuser-Busch in the United States, who creates beer, figured out that they could pretend to be indie craft labels in order to get the trend of people not wanting to buy Budweiser. Is that correct? Is that what TradFi is doing right now? Is like TradFi is like investing huge amounts of money and capital into pretending that they're decentralized?
Yeah, like, and I would say in big proportion, and they are like realizing that the future of finance is on chain as I see it. At the same time, also is the fact that many years have passed, like from the emergence of Ethereum. Basically, Bitcoin enabled the properties of a blockchain that probably you have to talk about. Ethereum enabled to create any type of product, financial, non-financial, AI, to put it in a database like the blockchain and create whatever you imagine in TradFi or in like any industry on chain with those properties. And
Wow.
we're like just very early. 10 years have passed from that, and now that that first 10 years maybe have passed, plus all the new technologies, TradFi says, "Hey, okay, I think it's the moment." And those early adopters are the ones that maybe see more upside than that, and all the like all the other industries and companies they need to catch up. If not, they will lose. And stablecoins is like the clear use case. Like
Mm.
crypto emerged as something decentralized. Stablecoins, many of the stablecoins and inception were meant to be decentralized, and the crypto fanatics like use this. But now we can see that the only thing that has PMF, like a product market fit in terms of stablecoins, is centralized stablecoins. Like decentralized stablecoins is less than 0.5%. And this is like the TradFi Trojan horse into DeFi, and that we are able to see. And in some point, it's good because it's enabled us to like transmit the wider and the best benefits of blockchain to the rest of the retail users, right?
It's so interesting. So I just found out that the Genius Act in the United States, the Genius Act was a bill that was going through regulatory clearance in the House of Representatives, and this I found out a ridiculous thing that happened in my strange political environment in my home country, which is that so they were passing the Genius Act, and the Genius Act was basically a financial surveillance tool that basically the United States government has realized or maybe planned that the last 4 years where they were trying to stop everything, they're like, okay, that's not happening. We're not stopping any of this. Now we're just going to surveil it all. So it was basically a way to surveil all of the transactions that are done through stablecoins, and they were trying to make sure that all the stablecoins had KYC regulations and just like all this stuff that's kind of the antithesis of a lot of the reasons that I'm drawn to crypto. And then the Democrats tried to sneak part of they tried to mandate that the Trump administration would release Epstein videos as a part of the Genius thing. And so then of course, like it totally failed. So it never passed the House. They're going to do something different now. But the reason why I brought that up is also just because it's kind of ridiculous that they tried to sneak that in there. Is that there's all these things that are going on, and I want to understand DAI, DAI. They were the first ones to create the stablecoin. Is that it's so decent? And that was Luna too. Like Luna tried to do a pegged stablecoin, a decentralized pegged
Yeah.
stablecoin, right?
And
Yeah.
yeah, I will jump there because it's like
Hmm.
very important like to grab the difference.
Yeah.
So the first stablecoin and meant to be decentralized was like actually Sai. It's called Sai,
Oh,
but
interesting.
then it emerged into Dai. Like it's just
Okay.
a rebranding. And Luna came later. I can explain that. But Dai basically what it says is, hey guys, like we have this new crypto stuff, Bitcoin and Ethereum and all these maybe shitcoins from ICOs that emerged in 2017,
Yeah.
and this wonderful technology. But people want to like sometimes even what do you measure Bitcoin or Ether against
Yeah.
in the
Interesting.
blockchain itself? Like
Yeah.
how do you
Yeah.
price these things? Or
Yeah.
if you want to make stable payments and I send you one Bitcoin and in one block to another in 10 seconds it changes the price, doesn't make sense. So they say, hey, let's do something. There are a lot of Bitcoin and Ethereum whales that don't want to sell their Bitcoin or Ethereum, but they need liquidity. So I enable a smart contract that is like a vault where you put $200 worth of Bitcoin and you can create $50 worth of a stablecoin like that is called Sai or Dai, for example. So what it says is, hey, you have as a collateral $200 of Bitcoin, and then I have like and I created this new stablecoin that is Dai that is worth 50 units of $1 or $50, and if Bitcoin drops in price and what it happens is when Bitcoin drops, let's just an example, below $80, so you're still far away from those 50 you have created, anyone can repay your debt, so your $50, and keep the BTC, those $80, and make the difference, so those $30. So you have a financial incentivized ecosystem in which you have a stable dollar created in a decentralized way, and you can guarantee it's stable because like you always have more than $1 of collateral against that stablecoin. And basically, in very brief terms, that's the first decentralized stablecoin that is DAI, and today is called USDS, like from MakerDAO. And then you have like what we have
Mm.
today, that a lot of like different types of stable coins, like, and the most recent and trendy ones are the centralized backed by US Treasury bills. So
Yeah.
basically at crypto, we are like resellers of US Treasury bills. So yeah, and Luna is another topic that I think is worth explaining,
Yeah.
but
Yeah.
not
Please
sure
do.
if
Yeah.
yeah, so Luna basically tried to like replicate this
Uh,
in some sort, but make it more fancy and more cost efficient. And what they say is, I will make an algorithmic stablecoin, so I have like a dollar, like dollar, and backed by my own native token, like maybe back my own shit token that is Luna, and to put it short, it was algorithmically backed because you depend on Luna price to be able to cover the stable dollar, like denominated that it was called UST, and Luna
yeah.
was the native coin. So when there was a cascade of
Yeah.
sell of Luna because price, you were not able to keep up that balance sheet of $1 and more than $1 in collateral, and that math equation just broke.
Mm.
I'm being very simplistic, but
Yeah.
that was basically what
It
happened.
was so crazy, and I talked to a podcast guest probably about 6 months ago, and we were talking about that event, or we weren't talking about that event. We were talking about the Great Depression, and I asked, when are we going to have an event like the Great Depression inside of crypto where it just completely destroys it? And he's like, "Oh no, that was it. That was Luma was it. That was exactly what happened
Yeah.
in the Great Depression. Like it was all of a sudden it broke in the Great Depression. It broke the stock market connection to the banks, and then basically just like short circuited the entire monetary system." And then FDR, we had our own corralito. I'm not. You're probably now young enough. We had our own corralito in the United States before I was born, where
I don't know.
Franklin Delano Roosevelt went after 3 years after he got elected after the Great Depression because of the Great Depression. He was trying to save the monetary system. And so he basically told all the US citizens that your gold is no longer yours. You need to give it all to the US government. Like all that gold is now ours. And actually like sent, that was first time that the US Treasury Department turned the US Secret Service into going into people's houses and stealing their gold. They weren't that strong at the point, so they didn't do a lot of that. But that was like we had our own corralito basically. And for my listeners who don't know what a corralito is, in Argentina in I think 2001, the government did the same thing in the banks where they forcefully converted pesos to a much lower value towards the
Yeah.
dollar. Basically, 50% of Argentine savings were cut, which is also why Argentina understands the necessity of crypto. I would say. Anything to share
Yeah.
there?
Yeah, 100%. I mean, Corralito was like this big trust broke event, like was like a vice versa moment for us in how we like trust governments, banks, and fiat money. And that's also one of the reasons of like very high crypto adoption in Argentina, because like a very big part of the population lost their life savings in one day to another just because of the government. So that's one thing. I have forgotten about like the US Corralito. It's really great. I think I read about it in the book Broken Money from Lynn
Ooh,
Alden. That is like
okay.
highly recommended, especially to see
Broken
the
money.
history of money,
Yeah.
and the importance of crypto after all. Like it's a macro researcher is really good, and it's and yeah, and yeah, like that's also one of the reasons of why we uh, many hardcore Argentinians and many Argentinians that even don't study finance or don't know crypto, they use crypto or they know about macroeconomic stuff like inflation, like
Yep.
even without being into a topic because it's like
Yep.
part of our daily lives in the last 10 years. So you're
And I learned
100%.
about it. I learned about it from moving here 2 years ago. It was the first time that I had to use crypto, not as an investment tool, but as a tool to bring money into the country. And so I started using crypto daily, and part of the reason is because other people would accept crypto, whereas in the United States, it's like one out of maybe 1,000 people would accept your crypto. Here in Argentina, maybe one out of 50, definitely a lot more than the United States. And it also taught me about microeconomics. It taught me about inflation, hyperinflation, a whole bunch of stuff. I don't understand what the government has done in the last 2 years in order to get it under control. I don't even know if it's under control. I don't even know if it's an illusion of control. But a whole bunch of things happen, which are
You
like,
have seen
and
the whole history, like of
yeah,
these 2 years. It was like the best moment to see this. It was
exactly, to get a
crazy.
PhD in how economics really work, rather than the economics of the academic. But my final conclusion on that is that money is fake. It's totally fake, but it's really real when
Yeah.
you got to pay the bills. Um, uh, okay, so I'm really interested into how, because you have a large like wisdom of finance, and you seem pretty young. I don't know your age, and you were like acting as a treasurer for a crypto thing. Like, how did you understand this? Is it just like a passion, or did you study it? Like, how did you get into it?
That's a good question. Like the TLDR will be that I was lucky enough to be
Uh-huh.
passionate about it and be able to spend my time on it. So like pretty lucky on that. But when I was young in high school, like I think 2015, I'm from the 2000s, so I was like 15 years old. I heard about Bitcoin and I briefly entered. I remember like maybe 2 years later, I lose like my whole savings that were like 5K
Mhm.
in 3 days trading
No.
shitcoins. And Yeah. No, but it was like I was into obviously into the money, and like when you're like very very young, you're in high school,
Yeah.
you just want to win money fast.
Yeah.
And then when I started to see like my money recovering a little bit, I basically say, oh, what's more about here? I start to like interact with different things of blockchain and crypto, like decentralized finance. I was studying to be an accountant in Argentina. That, as you mentioned, is quite challenging, and it's good to have a base knowledge of everything. And I like stocks and finance all my life. And in the middle, I start to play with DeFi, like when I was in university or like in my early years, and doing stuff with that, like doing investments with gaming that is on chain, that is a different history as well.
Interesting.
We can jump into that as well.
Yeah.
And I basically like was those years while studying, I like make some investments of my own, like working on my own and explaining like maybe leaders on Web2 companies, like very big companies in Argentina, explaining how DeFi works on Ethereum, and I love it. So since I love it, all my free time was spent between football and crypto.
Yeah.
And that enabled me to like spend probably 6 hours per day when I was younger, and now like 12 hours per day studying this because I love it and it's not an effort for me. And then I started on gaming like crazy times, like in 2021, like unexpected things I never expect, like to when I was that old. And then I started managing like Kleros treasury, that is a big treasury. And from that it was all like lucky because I was able to get paid to like do what I love, and that enabled me to even spend more time, have more knowledge, talk with more people, be surrounded by people smarter than myself. So yeah, all that compounded into today and creating different products all around the decentralized finance and blockchain.
And I love Kleros because it's one of the one teams that is doesn't seem to be involved in shitcoinery. Seems like everyone else got really into shitcoinery there for a long time, uh, which is funny because it's like you just see it over and over again. As soon as the wave goes up, people start to stop paying attention to anything except for price, and then it goes down, and everybody starts to pay attention to the fundamentals. And then it's just like a wave. For someone like you, it's really interesting because you just laid out this story of somebody who, at a very young age, when you're still very plastic, basically learned all these technicalities. And so it gives you a wisdom that kind of like, for myself, it's taken me since 2017 to really try to understand all this different stuff. And I'm still, now I only feel like I have an intermediate level understanding of finance and all these things. Um, I started earlier with technology, and your story reminds me of my story when the first tech company that I ever invested in on E-Trade. E-Trade in 1997 was this big thing for us in the United States. Maybe in Argentina they had something similar, where you could trade stocks online. And so I took all my lunch money when I was 16 years old, and I invested in this company called Webvan. Have you heard of Webvan before?
No
Yeah,
idea of
no way.
Webman or
Yeah,
even
yeah.
E-Trade. So
Or E-Trade, okay, yeah, yeah. So,
yeah.
so, so E-Trade, Webvan. I took all my money, in my lunch money. I invested in Webvan, and Webvan was this fancy company right at the start of the first tech bubble that promised to basically deliver all of your groceries via internet. We didn't have apps at the time, so it was just delivery via your computer where you could go and order food. I was like, this is a great idea. This is definitely going to work. And so this company, as the tech bubble was getting really hot, they rented this giant office space in the middle of Silicon Valley. They did the thing that Google did. They invested all their money in like massages for their employees and all this crazy stuff. And then it was just like total excess. And then of course, once the bubble crashed, it all failed. And so I lost all my stock money, and I was like, okay, never again, never doing that again. And here we are now. Technology in the next 20 years has basically started to take over finance in this really interesting way. But that brings a lot of scammers and shitcoiners and all these different things, including some meme coin presidents who decided to get in on the game. And so, okay, so DeFi insurance. So we've got all these different types of financial assets. We've got just a currency. We've got stocks. We've got real world asset tokenization. We've got insurance, as we've been discussing. We've got oracles. I was trying to find the finance terms, the things that are being recreated on crypto. What is the thing that's real? Like of all those things, what's going to be the first thing that's going to be kind of like really clear? Like this is going to change this particular industry. Is it going to be real world assets? Is it going to be stocks? Is it going to be treasury management? That sounds like an interesting thing. The fact that like $1 million for audits, where you're paying
Yeah.
programmers to do audits, is really interesting. What's your favorite interest right now?
Yeah, so there are a lot of stuff. I when I built Safu, it was because like crypto is big and insurance is really small in comparison with the size of crypto, and you cannot progress without insurance. I still felt like insurance needs crypto to mature even more to have product market
Yeah.
fit,
Yeah.
and that's why like I focus on DAM, and another Argentine dev guy is challenged me and said me, hey, your idea is like very good and I want to do
Yeah.
it, so he
Yeah.
took it
Yeah.
over.
Yeah.
And I would say that if I will need to like play the cards and say what will like be the things that will take TradFi and make them understand, will be the intersection and the combination of like payments on stablecoins, and but mainly the interaction of lending markets and everything that is like crypto assets, mainly like native crypto assets and tokenized real world assets. For example, the opportunity of being able to have a loan against like a tokenized stock,
Yeah.
the
Yeah. Yeah.
opportunity of being able to enter like a leverage position from any moment and with clear borrow rates. The thing that like Coinbase mentioned it, right? Like last week in Cannes in France, there was a very important crypto conference, and I was talking with these guys of a lending market called Morpho that basically explained that TradFi institutions with several track record and years, like we're asking how did retail users via crypto access so much cheaper loans that the TradFi with billions of dollars in their bank. So
Mhm.
I would say that this intersection between tokenized assets and native assets, that we will call it yield-bearing tokens, so assets that increase in price with some sort of yield, and lending markets, is like what will like first be the DeFi Trojan horse to bring TradFi on.
Yeah, that's really interesting. And that goes going back to this history of finance. This is the great book I read a couple of years ago. What was it called? Is The Price of Time. The Price of Time was a really, really great book that goes into what is interest, why is interest there, and it starts out with Babylon, and people are lending out their seeds, and the seeds have an interest, and it's usually like 20%, and for a long time, interest rates were 20%, 10 to 20%. And then all of a sudden, like you have the Christian sort of nations where they all outlawed usury, and so, because of the Bible, the Jewish people were allowed to lend out money because, the Old Testament, the New Testament, there was a sort of a let out for the Jewish people where they were allowed to lend money to Christians because they were brothers, but they weren't of the same religion. And so there was like a little loophole to get around the usury stuff, which Christians didn't take advantage of. And so, but then that's interest. So like, 10% interest, like above 10%, I believe is the biblical thing above usury. But now we've got credit cards that are giving out 19%, and like the whole US system is based off of 19% for the people lending money. And then crypto came in and started to offer like 20%. There were some really crazy high percentage. It was like 20%, right? In
Yeah,
that lead up to Luma thing. That was the amount of money that was being yielded, right?
yeah, it's the like the Luna thing that collapsed basically was that 20%. It's actually not impossible to get a 20% in crypto,
Uh,
and because different scenarios, but like let's say native 20% in a like safe way, yeah, it's like kind of
yeah,
very
it's
difficult
risk.
or impossible
Yeah.
without
Yep.
leverage. Luna basically was, they were saying this is like real 20%, and they were just print like giving money from their treasury and giving money away like in an unsustainable like that end up indirectly in the collapse of their token, and this like yeah cascade of liquidations, let's say.
Yeah. Because that's something I noticed from 2010 to 2020 is that there's this. I love crypto. I love talking about all these things, but there is this intersection where crypto sort of took what was going on in the technology world already, which is a sort of Ponzi dynamics. We're talking about interest rates. So we had low interest rates from the U.S. government at one point. And I won't go. So low interest rates. At one point, Japan was giving negative interest rates. So that means that they would pay people to take their debt, which was totally crazy. But that's the last 20 years of the United States. It's just been low interest rates to try to prop up the real estate market, particularly after 2008. And so that just kind of created this bubble dynamics inside of the technology world. And so you started to get VCs who were just doing this hustle culture meme where they're trying to say, like, you guys should work as hard as possible because we're going to give you venture money, and you got to spend that venture money because we got to get more money into this system to just like pump the asset. And that was just within the tech world. And then you have crypto come in and take those mechanics and decentralize them to allow like anybody to do that. And then so like the incentive there though is to grow as big as possible, to do the things like what we just talked about with Luma, where they're just like promising these crazy things. And so then you have like people building real things on the side who get no attention. And then you get all the attention goes into it. Yeah, tell me more. Yeah.
No, that's like 100% accurate because as it happened in traditional finance and everything, you see it in crypto, in the sense of, imagine like companies are raising money and like making very similar projects like that maybe already exist, and they spend like crazy amount of money in events or like in giving money to users for a product that is like maybe not even like 2x better than everything else. What ends up happening is that in crypto you have these airdrops. Not sure if like you have spoken about this, but is imagine that you go to McDonald's when McDonald's was born, and like as you were the first customer of McDonald's, 10 years later when you went to the stock market, you receive a stock of McDonald's. So basically that stock of McDonald's may be worth $10, and because you were a customer. In crypto they give you like these tokens or points, even sometimes that's like a airline mile program in which, hey, maybe use my product that is a shit and generates no real yield or like almost non-real yield, and to bootstrap and growth I will give you the money that the VCs gave me so I can fake growth and translate it to the user, and actually the VCs maybe get dragged or not, or even the retail users. So it's like a
vicious
game
cycle
that like doesn't make sense. And obviously there are like a lot of great projects, but when you're building something and you have like no the tools or the money to, or you don't want to play this short-term game, like is our case, like in DAM for example, you can struggle about it. But I think that if we bet that the future of finance is on chain, you just want to build things that last 10 years and not something that you can jump like a startup like 1 year and then disappear, like the example you mentioned on E-Trade.
So very good point, because that's the crazy thing in crypto. I wonder if I can pull it up really quickly. There's this great, where did I put that? Okay, yeah, I'm going to bring it up. So there's this great meme. I'm going to pull it up so I don't kind of, okay, open that. Yeah, okay, got that. I'm going to share the screen for my listeners. So
and I'm thinking, what's the meme about? Probably I know it, but
do you see it?
I'm not seeing it. Let me check. Where should I see it?
For some reason it didn't open. Okay. No, you don't see it? Okay, so the share screen is not working. Damn. Okay, I thought I did that right. So Riverside strikes again. Okay, so basically I've got in front of me, I've got this giant map, and there was this guy called, there's this famous Twitter guy who's very smart, and so he created this map, and it says Europe at the beginning of the year 1200. And 1200 was right before the Mongols came in and just wiped Europe, very strongly changed Europe, and also the Middle East, and took over the Middle East and took over everybody else, and then just receded, went back after 100 years. They just went back, and so it's got this thing, and it's talking about AI. And the real thing I want to talk about is that it's got crypto put inside of Venice. So it's basically saying that crypto is like Venice in the year 1200, and Venice in the year 1200 basically was right before it turned into a financial Goliath. But it wasn't empire. They did try to do an empire. They were the financial empire. So they basically like put all their seeds into the rest of the world, financially speaking. And so it's a great map. If somebody wants to find this, please DM me and I'll send it to you. But this point about crypto is really interesting. Crypto as Venice, because it's talking about Western frontier models with AI and DeepSeek, and then it says climate change as Mongolia. I disagree that climate change is going to represent that type of thing. But crypto, we're in the information age now. We were in the industrial age. We're now clearly in the information age. And information and finance and money are very tightly connected. So there's intelligence agencies. Intelligence agencies basically created the internet, and they created the potential for the information age to exist. And now we have finance. And Venice was this early innovator in the information age 900 years ago. So the crypto information age Venice pipeline is something we can look at to like understand the future of the world. What do you think on that? I just threw a lot at you. What's your take there?
I first I will ask you the meme and the map.
Yeah,
Send it over.
I'll make a note.
Uh,
Send it to you later.
I really like the metaphor, like or the idea of in crypto being like this like first brick like on the next like financial like information financial era, like in which you could never had the chance like to disrupt the power of government fiat money since like basically since money emerged, and since like it's more with digital stuff, and we seem too late in the sense of, hey, Bitcoin already rise and Ethereum rise out of the price. But if we like just abstract from price and we just focus on like on how this changed the rules of the game, like for everyone involved, like from governments to users, and like democratizing the access to finance, no matter where you're from and what's your background, it will be like the Venice like of the next era. And if we think about that, and that only 15 years have passed, we literally should think like we are the Venice of this era, like especially with AI coming and everything. I think will be even more important at the intersection of agents and DeFi and what's called DeF AI. That I am not an expert yet, but to be honest, I'm very bullish. Not sure if you have seen something about like DeFi and agents and AI. I guess that is more your land.
Well, yeah, no, I've studied a lot. It's interesting because, as you know, I'm down here in Buenos Aires, and we've been running the AI Whisperers Club every Thursday evening for 2 years now. At first, I didn't really want to get too involved in crypto because of all the things we've been talking about, of just like it's such a strange place to be. I've studied it for a long time. I love studying it. But then we partnered with Crecimiento, and that has been awesome because Crecimiento is like a really solid space, and we brought all these people to go work there, and now we're doing more vibe coding events and everything. And so I've become much more aware of the connection between crypto and AI, and specifically a great podcast I've done is with Mallory McGee, I think his name is on Twitter. So we did a great episode where he explained to me what's going on in the behind the scenes in terms of creating deterministic blockchain code that interacts with probabilistic agents. And so this combination of determinism on a blockchain that's immutable, censorship resistant, decentralized, with agents. And actually, in my conversation yesterday, that really became much more clear, where the agents, there's a lot of times where humans need to be in the loop. And I think most of the Ponzi scheme, enterprise, Silicon Valley type of things going on, they're trying to remove the human from the loop for really things that should not be having the human be removed from. In contrast, crypto, I think some early, people who are innovating in this stuff, there are certain times where you do want a human out of the loop. And so there's something called a TIE, I believe it's called, a trusted execution environment, a TEE. And that is a way that you can actually give the agent full control and have no human in the loop. But that in finance, that I'm sure there are certain areas of finance where that might actually be really helpful, because you want proof that there's no human. There's because
Yeah.
that yeah, well, yeah. Where does your head go where that is?
I, I think it's a combination of like both, to be honest. Related to the last question and finance and intersection of for example TEs or like how do you manage? I feel we still like finance. Besides, it doesn't seems like it in DeFi, especially after all, people what want is to trust the asset manager or like the guy who is making the final decisions. And besides AI, like in the long term, I'm sure like will like be like disruptive and many of the models will manage by the AI. Maybe you always want like a human to be able to press the red button. At least that's my uh,
Yeah, yeah,
that's my take for the next
yeah.
10 years, 5 years. But for example, on our case, what we do is we have like a tokenized hedge fund, let's imagine, in which you put digital dollars and you forget about it. And why you forget about it?
Mm.
Because us, that is like the ones that like maybe are like all the days like researching about this, because we learn all the days. Like for me being able to know what happens, I need to literally research every week, every
Yeah.
day. So
Mhm.
what we do is we receive that digital dollar that you deposit, and you receive like a receipt of your investment in the tokenized hedge fund. But you're able to prove on chain that the only thing we can do is interact with this smart contract that is providing this digital dollar, for example, in Uniswap, that is the most battle tested platform, and remove it from there. But we are not able to do anything beyond that. And that combination between, hey, you're trusting for him to make the allocations, like to win the yield and give it to me, like in the best way optimal, but I can prove that you cannot do anything like malicious, is some of the like of the things that we have a lot of interaction with agents, but also you will need, like I guess at some point, at least in our uh, view from the next 10 years, some human interaction. And then you have like another leg tied to this, and what you mentioned of the information era and agents is like for example prediction markets, in which you have like a tokenized version, or like you're able to trade information and put your money where your mouth is.
Yeah.
And you will have agents like mostly trading prediction markets, absorbing that information and likely making money of it. And I think that's also something that we will
Whoa.
see, not maybe in the one in next 2 to 10 years, but in the next 2 3 years. And yeah, and there's a good presentation that the Kleros co-founder made, Clement, that I will send it over, talking about
Yeah.
this 2 weeks ago. That is interesting about that. So yeah, like okay, I say many things on these two answers,
I'm
but it's
taking
like
I'm taking notes there. Brilliant. So the information piece is really key. And you said agents are going to absorb the information and make decisions on that. And probably I agree with you that it's going to be humans will need to be in the loop for a lot of that. But the information age, absorbing information, this reminds me of, in general, you have insiders and you have outsiders. In the US, we stop insider trading because insiders have inside information, and so they can make money off of that inside information. And now that we're in the information age, most information is out there. And this is one of the most fascinating things I've learned in Argentina from a previous podcast guest as well. And that is that in the United States, because we're the empire of the world, we have a strong focus on transparency. So we are transparent about everything. Everybody wants to be transparent all the time. There's certain legal things, and I don't mean to be naive. There are definitely some things going on in the central power centers that are not transparent at all. But in a place like Argentina, which is more on the edge, transparency is not highly valued here. I find like people are less willing to do podcasts. Like there's a different thing. So that's an interesting thing there. Information age, agents consuming information. Also, what I see with AI is a huge amount. Like I'm making a bet, and I actually forgot to ask you this. I want to learn how to turn a idea or a conviction I have into a bet, either on crypto or in the traditional TradFi. So I have a bet that information is going to explode with AI, and that information asymmetries are going to come back in a big way. Right now, because of the internet, there's information symmetry. There's information symmetry, but now you're going to have AI producing huge amounts of information to the point where no human and no group of humans can keep up with that.
Yeah,
And
you
so
can
I
no
think,
compete.
yeah, yeah. What do you think about that? What do you think is these AI agents? Most of it's going to be slop and not worth the attention, but that's also probably plays into it, right? Because there's creating so much information that you can't tell signal from noise. What do you think about that?
Yeah, I think in curation, that basically like yeah, removing signal from and noise will be key and will be a big problem. Like we already like kind of see the next like whatever you see that of curating this, but like specific to the point of like how to bet money on your beliefs. That is what you mentioned. Okay, this a lot has to do with prediction markets on like where you put your money into it, and you have like poly market that I guess that you have heard about it, and that is like even very big in the US. But then you can like make stuff like with prediction markets that enable you to play a lot with this.
Oh,
Hey,
cool.
how do I make money with my beliefs? And you have like this, for example, it's called conditional markets. That
Cool.
what you can do is and you use prediction markets to only bet on a subset of like a parallel universe that might happen in the world. For example, let's say that we are like before the US election and it was like Trump versus Kamala, and you say the only thing I wanna bet is that if like I don't want to bet if Trump or Kamala wins because I have no more information on the market about that and I have no alpha there. There's a lot of like symmetric information, but I know that if Trump wins, I will Bitcoin price will
Oh,
rise.
interesting. Cool.
So with prediction markets, you are able to have this what's called conditional markets that you only trade a subset of the question and you say,
Well,
hey, if like we have this election and today Bitcoin price is like 100,000 and Trump wins, I know that it will go unto at least unto 110,000. So you can make that bet, and you in the universe that Trump
well,
finally loses and Kamala loses, and Kamala wins, you don't lose money. You just recover your money because you are playing on the universe in which Trump wins. So if Kamala wins, you keep your money. But if Trump wins, if Bitcoin that you are the expert in Bitcoin, for example, or in any subset, like you can create an prediction market. If Trump wins and effectively goes to 110,000, maybe you create like a lot of money. And if it stayed in 100K or less, you lost money. But you're only playing in that subset that you're specialized in. And the possibilities are endless. And that's why like the combination of the information age with blockchain transparency that you're able to check all the time how the people are trading their beliefs, it opens the doors to a lot of things, and their agents as well will play a big role.
brilliant. Conditional markets. That's crazy. It's like a matrix sort of there's a great meme that like goes through decision trees and then there's a green line going through all the decision trees and then all the other ones that didn't happen are black lines and so you see into the future. Also reminds me of hyperstitioning. But I have reached the limit of my information comprehension ability. Thank you so much for coming on the show. How can our listeners find out more about you and Dam Capital?
Yeah, sure. Thanks, Stewart, like for the invite. Like, to be honest, it was a pleasure. And I went to one of the Whisper Club and I really enjoyed it. So
Oh, cool.
congrats for that. And like you can find me mainly on Twitter. I don't use LinkedIn or other social media much. I'm Juan Samitier. Like I'm fully doxed as well. Not that average crypto user.
Uh-huh.
And Dam Capital is Dam's Capital on Twitter as well. Dam decentralized autonomous money management.
Uh-huh.
But you can in US you say Dam or like I don't even spell it very good. But it's that way. So yeah, reach out there. Like happy to help whatever related to DeFi or like anything else. And yeah, like a pleasure meeting you. And we can see in Buenos Aires.